Hello traders, this is Dion. So in this short video, I want to talk about breaker blocks. Alright, so if you're new to this channel, please consider subscribing and like this video. So when it comes to trade entries, when you're looking for a trade entry, in most cases, you are waiting for the market to take out. You are literally waiting for the market to take out this low here if you are trying to take a sell. You are looking for this market structure shift in most cases. Okay, not just a market structure shift, you are also looking for displacement. You want price to take out this low, but also leave a fair value gap or imbalance up there, so that when price goes back to that fair value gap, then you can enter. Now, here's a situation. Sometimes price won't go all the way to that imbalance. It will just react to a random area and then drop to the downside aggressively. It will drop, leaving you just stranded, still waiting for price to return to that point of interest of yours. So this is where breaker blocks come in. Okay, so this is why I wanted to talk about breaker blocks. Okay. Now, what is a breaker block? A breaker block is simply a failed order block. It's a failed order block that turns into another supply or demand point of interest. All right. So in this case, when you have here you had a bullish order block. All right. But this bullish order block was violated by price aggressively, okay, with this displacement, meaning this is a failed bullish order block. So if you know basic supply and demand, you have to know that when a support level has already been pierced, it's supposed to become a what? A supply level. That is just basic price action. So even with order blocks, you have failed order blocks. These are the order blocks that become breaker blocks. So the reason you need to know about breaker blocks or understand how they work is because of situations where price doesn't go to that fair value gap that you are waiting um, for market to to go back to. Okay, so what are some of the factors that you need to consider before taking a sell or a buy using breaker blocks? One, you need to consider market structure. Okay, as always, it's not just with breaker blocks. With everything, you need to consider market structure, because market structure is going to tell you whether you want to take a trend entry or a counter trend entry, whether you are going with a trend or you are going against a trend. This will help you either hold a trade or just hold a trade for a limited amount of time, depending on where inducement is, or those factors. Yeah. So what you need to consider first is market structure. Okay, are we in a downtrend, or are we in a in a in an uptrend? Also, market structure is going to give you that point of interest, because you can't just go under small lower time frames to look for a breaker block entry without having a high time frame point of interest. So you will need to have a point of interest on the high time frame, whether it's an order block, a fair value gap, or a liquidity grab. You also need some sort of liquidity grab, okay, on that higher time frame. All right, so the other thing is validity. All right, so before you take that breaker block entry, you need to know that it's valid. You need to make sure it's valid, okay? And what makes this a valid breaker block? For if you're trying to sell here, make sure that breaker block has a fair value gap above it, not when this is already closed here. All right, make sure if you're taking a sell, it needs to have a fair value gap above there. If you're trying to buy, it needs to have a fair value gap, an imbalance down there. Okay, and also when you are enter just with other just like other setups, you need displacement. Okay, by displacement I mean you need a candle that take out this other this other fair value gap here. Okay, it takes it out and then makes this market structure shift here. So the idea is that price can go back into this breaker block, even go as far as that fair value gap. Okay, so even when you are entering into this breaker block here, if you are one of those aggressive traders, okay, I tend to take some of my trades here. You still need to put your stop loss above there. Don't put your stop loss in a fair value gap. You are going to lose a lot. If you put your stop loss in a fair value gap, you are just doomed. You just want to lose. All right. So those are some of the things we need to consider. Also, confirmation. Okay, by confirmation, I just mean this retest right here. If you're trying to take a sell here, since we have a sell setup here, if you're trying to take a sell setup, you need price to go back to this breaker block for you to enter. All right. So these are some of the scenarios why I keep emphasizing that you have to put your stop loss above that high. Okay, if even if you entered in this breaker block here, you have to put your stop loss above that high. If you don't want to use a breaker block, wait for price to go back to that fair value gap there. Then you can enter. This is going to make a better risk to reward ratio. Okay, because risk is reduced here, obviously. Also, sometimes price can just go all the way up to retest that order block that formed up there. This order block has a fair value gap down there. So price can just go all the way to that order block, even fails to close above that breaker block. These are scenarios where you need, these are the best scenarios. Okay. If you see price goes up, retests that order block there, okay, and then close within that breaker block. If you wanted extra confirmation, that is another confirmation. You can add more cells here if you want. All right, because price is respecting that breaker block. But still, don't put your stop loss above this high here. Okay, put your stop loss above that high. All right, so those are just a few things that you need to know about breaker blocks. I don't want this to be a long video, so let's just go straight to the charts if we can find an example. All right, so this is this is the Euro USD. This is the 3 minutes time frame. So like I said, you need at least a higher time frame POI. Okay, so on the 15-minute chart, and then you go down. If you want, you can go down to 1 minute time frame. I wish I went through all the time frames, but I don't want this to be too long. So what you need, first of all is for this breaker to have a fair value gap down there. Okay, you need to have some sort of inefficiency, imbalance, something. All right, for you to label this as a breaker. You don't need this to have nothing here. Okay, if the candles are touching all the way up there, you don't need to mark that as a breaker. All right, so this is the situation that I was talking about where price may even leave this fair value gap here. Okay, you have that fair value gap down there, and then you are waiting for price to just go down to that fair value gap. Now, instead of going all the way down to that fair value gap, it just retests a breaker here. It just goes straight to the breaker and then bounces off that breaker and start going to the upside. So you have a lot of scenarios like that. You have a lot of scenarios like that. So this is why you need to understand what is happening when price does something like this. Let's see if we can get another scenario. Okay, so this is on the 5 minute chart now. This is the current price. This is the current price. So this is a 15-minute POI. Okay, now if you are trying to get the best out of breaker blocks, when you see a breaker block that has already formed and then it has formed in an area where you already have displacement, where you already have a fair value gap here, these are the best. Okay, these are higher probability, these are higher quality trades that you can take. All right, so in this situation, of course, market has already made a market structure shift there, and there's also displacement. Now, as you can see here, you already have, so even if you didn't know anything about breaker blocks, even if you had no idea what a breaker block is, at least you know what a fair value gap is. Okay, so this tends to be high quality because of two confirmations. All right, you have two confirmations. You have a breaker block, you have a fair value gap here, you have displacement, you also have the higher time frame POI, okay, which is an order block. All right, so this works best if you pair it with higher time frame points of interest. Don't try to start looking for breaker blocks just on random places. It's going to be a bit too complicated for you. So just try your best to be patient and disciplined. It doesn't matter whether if even if you lose a trade here, just try another day. Okay, this is why I advise try to backtest before you trade it with your money. Okay, get comfortable with the strategy, and then so with breaker blocks, even if you are doing market structure, first you mark your market structure. You are marking your breakout structure, your change of character, and whatever, and then marking your high time frame POIs, or you are using the 1 hour strategy. If some of you, if you don't know the 1 hour trading strategy, I think I'll just put a link. Then you can click on it and look it up. So it doesn't matter what you are using. Okay, if you are trying to get an entry on the lower time frame, you can still use that breaker block. You just need to, I just wanted you to be aware that there's a breaker block sometimes, and then price may not go all the way to that fair value gap that you are waiting for. If the fair value gap is up there and then a breaker block is down here, there's a high chance that price can just react to that breaker block and leave you hanging. You won't enter that trade. You just see it dropping down. So yeah, if you've made it this far, thank you very much. You can like this video and also subscribe. Also, you can follow me on Instagram. I just opened my account. All right, guys, until next time, happy trading.